Good morning! What's up, ladies and gentlemen? Welcome back and happy, I don't even know what freaking day it is right now. It feels like Monday, but it is definitely Money freaking Thursday. Wake up, wake up, wake up. It's the first of the month. Get up, get up, get up, get up. Yep. That's a good song. And it's the first of the month, so welcome to August, ladies and gentlemen. I'm excited to be here. I am excited to see what the market has in store for today, this week, and this month, so we can make August just as phenomenal as July was. Congratulations to everybody that moved the needle in July, that crushed it, that made it happen. And you guys are just working your butts off, and it's clearly showing. So good work, guys. Keep it up and keep that momentum going into the month of August. But right now, I need everybody, and I mean everybody, hit me with a big ol' good morning inside of chat. And if you're feeling up to it, open those mics in the Zoom and hit me with a big ol' good morning as well.
Good morning.
Good morning, Julie. Always bringing that energy in the morning.
Morning.
There it is. Good morning, sir. You got a little country accent there. Good sir, you? What's up, Trucker Ed? Good morning, sir. And then everybody else inside of chat. What's up, Spencer, Zach, Don, and Stir, and Andy? Woo, and Stir already doubling his daily goal for the day, making $1,500. Let's get it. Steve hitting some meta earnings profits last night for like 7K. Let's freaking go. You guys are starting the month strong and profitable. I love it. And good morning to everybody else. Let's dive into it, guys. We got about 7 minutes to make up because your boy's 7 minutes behind. All right, you got 23 minutes till the market open. We got to go do a speed round right now. Go into the economic calendar right now. Let's go ahead and see what's on the count. Man, I could actually be an auctioneer if I wanted to be. Woo, that was really hard, but pretty freaking exciting. All right, let's start with the economic calendar. Let's talk about what we got going on for today and get this out of the way. All right, so here at 9:45, we got some data set to be released. That's going to be S&P Global Manufacturing PMI data. That is of medium importance, and it's definitely the type of data that we can see the market react to. So be mindful of that. We got some data coming on up at 9:45 today. 10 o'clock, we got even more important data, and this is the type of data that the market will react to. All right, ISM manufacturing PMI data of high importance. That's set to be released here at 10 o'clock, guys. 10 freaking a.m. All right, so you got two pieces of economic data being released right after the market open, 9:45 and then 10 o'clock. And then other than that, guys, we are in the clear for today. And I'll tell you what, I'm looking at the SPY this morning. I'm looking at the Qs. I'm doing my TA, top-down analysis. I'm on the daily, and I'm like, boy, oh boy, are we sitting at some really nice freaking levels. My goodness, today feels like it's going to be an amazing day. I like where we're at. I like the opportunity that we have. I'm pretty damn excited, to say the least. So let's talk about the SPY. Let's discuss what we got going on and get you guys prepared for the day. So there's 4 main levels you guys need to have identified for today, right? Lower zone of daily support going to be way down here between 547.09 to 547.45. Okay? Top resistance for the day is going to be up between 556.62 to 556.80. Go ahead and mark up the bottom end of this daily gap at 548.87. Go ahead and mark up the top end of this daily gap at 553.78. Okay, so you got lower daily support. It's a key zone. Higher daily resistance. That's a key zone. Right? And you do have your daily gap that we're currently sitting inside of. Okay? Let's go ahead and drill down to a 5-minute time frame and start building some plans. Some what-if plans. Like, what if the SPY opens inside the gap, comes up to the top end of the gap, and gets rejected, and it starts setting up for a possible short? Well, we would absolutely look to get short on the SPY for a gap fill rejection. So if we do open inside the gap, come up to the top end at 553.78, and we get rejected, I'm looking to get short back down to the bottom end of this daily gap at 548.87. Now, the one thing I want to say is we got pretty darn close to filling the gap yesterday, and we saw a pretty strong reaction yesterday away from the top end of the gap. I technically am going to count this gap as filled because we got within 20 cents and we saw a strong reaction. So I really need more on this trade to want to get in. Just because it comes up and hits the top end of the gap doesn't mean I want to just get short. I need another reason. What could that reason be? Could be, hey, price is developing and reacting really well. That suggests there's a good short. That could be the icing on the cake. That could be my other confluence, right? Price development, price action. There could be something else that stands out. I don't freaking know. But there has to be something else. So just so you guys know, normally when we're coming up to fill a gap, I would be willing to take a trade the second it hits that gap level to the penny, expecting a reaction. But we got within 20 cents yesterday to the penny and saw the reaction. So I'm not looking to do that today. I need to see more within price development and really make sure price action is validating this trade to make sure that, hey, this is a proper short setup off the top end of the gap. Just to go ahead and point that out. All right. So that's going to be game plan number 1. We set up properly for a short off the top end of the gap. We're looking to get short for a gap fill rejection. Back on down to 548.87. Game plan number 2 is if we break the top end of the gap And if we come back down and hold it as support, we could absolutely look to get long. Now, I don't like trading off the gap levels in that fashion, right? It's like I don't like to get long when we break through the top end of a gap. So, same thing. I would need more confluence to take this trade. Maybe there's a fib retracement here. Maybe the VWAP's sitting right there, right? Maybe there's an uptrend. I don't know. But there's got to be more than just a break and hold above that level, right? Because I don't treat the top end of the gap as support if we break through it. Now, if we're coming down from the top side into the top end, I count that as support. We see nice big bounces. When we get below the top end of the gap and hold below it, I treat it as a resistance for the gap fill short, right? But when we are coming in and filling a gap to the downside, for example, and we get below it, I don't count the bottom as resistance, just like I don't count the top as support. I just don't see consistency off those levels. You know, when we already have filled the gap and then we break above the gap, right? I don't really see a lot of consistency that the top end of the gap is such a significant, strong level of support. So I have to pair it with something else to make sure there's a reason to get in. But that's another plan. If we do break through the top end of the gap, if we do pull back and hold it as support, and as long as we have another reason to take that trade, we could look to take this trade long. Where to? Our next daily zone of resistance up between 556.62 to 556.80. Okay, and the third and final game plan is nothing, right? Literally, I just want to see what the SPY does off the top end of the gap, right? If we come up to it, get rejected, I get short. We come up through it, break above it, hold above it, and there's another solid reason to take that trade long. We take that trade long. Now, if we come back to the bottom end of this gap, would I consider getting in for a gap fill bounce? No, I wouldn't, because we've already respected that level yesterday. We broke inside the gap. We've already touched the bottom end, and we've already damn near filled the gap. So if we come back down to the bottom end, is there a high probability chance that we bounce like yesterday? Not as high as a probability. Yesterday, there was an 80% chance that when we broke inside the gap, we were going to come back down to the lower end and hold it and then fill the gap. There's an 80% chance that happens. That happened. The probabilities of this level holding again as key support for a bounce, the probabilities have dropped down to like, say, 60%. So it's not as high of a probability entry down around 548.87 for a bounce off the lower end of the gap. So what do I need? I need to re-increase those probabilities. How do I do that? By having multiple reasons to take the trade. Okay, but there is still maybe some opportunity to get long down at the lower end of this daily gap, and that's at 548.87. And if we see it come down to the bottom end, we see it setting up properly, we have multiple reasons to take this trade long, then yes, we could look to take this trade long if that opportunity is presenting itself. Okay, but right now, we're inside of this gap on the SPY. And if we can't break the top end of this gap, there is a very, very high probability chance that we see a gap fill rejection and we start to fade and fall on down today. That is the main game plan that I'm focused on for the start of the day to the short side. And really the reason for that is because when I look at the Qs look even better to the short side. And if the Qs set up and play out to the short side, well, hey, the SPY's going to set up off the top end of this gap and play on down to the short side as well. Let's go ahead and take a look at the Qs, and I'll explain why I like the Qs so much more than the SPY. And actually, the Qs take priority for me today. All right, at the start of the day, I'm going to be focusing on the Qs. All right, so here on the Qs, let's go ahead and find our key zones. All right, first area is going to be this daily gap. Okay, so the top end of this daily gap is at 480.11. The bottom end of this daily gap is at 474.25. So we do have this overhead gap, but there is a area of key resistance right below this gap. And so if you look left, you can see that there is going to be a pretty key, pretty significant area of resistance right at the bottom end of this gap, right? We had prior resistance, gap up, turned support, came down into it, closed and hit a low day at that zone, followed by a gap up push the next day. Came down and hit that level and bounced, gapped down below that level, hit it as resistance, and then flushed. So that is going to be a pretty key level of support resistance. We've hit it multiple times, right? And it's right up against the bottom end of that gap as well. What else do we see right around those two levels, right? The bottom end of the gap and that daily zone of resistance. Well, it's also right at the 20 EMA and the 50 SMA. There is a boatload of resistance right here around 474.25 on the Qs. Top end of the gap. Key daily resistance, 20 EMA and the 50 SMA. There is a lot of resistance overhead. So if we can't break through that resistance, I think there's going to be a great opportunity to get short. Where to? The next key level of support that I see is going to be down here between 467.81 to 468.20. Okay? So let's go ahead and build a plan. And honestly, I think the trade's already playing on out because my plan was seeing a lower high formation below all of that resistance and then cracking the uptrend to start to drop on off, right? So we're already starting to see that play on out, which is pretty unfortunate because there may not be the opportunity to take the short because right here is the opportunity to be getting short for the lower high crack of the trend line. And that's what we do have. So go ahead and take a trend line from yesterday's low of day and then connect all of your higher lows. And you see that we have a very valid uptrend from yesterday's low of day. We connect with this higher low. We connect with this higher low. Again, here in pre-market, a higher low, and then another touch point here in pre-market. And what do we know about trend lines? When we are building off of a trend line, 0.1, 0.2, 0.3 of higher highs, we typically get another big impulsive move to the upside after a 0.3. Then if we come back down to a 0.4, for example, bounce, but don't put in a higher high, and we start to see a lower high off key resistance, we know there's an 80% chance that we eventually crack the trend line and start to drop on off the lower high. Again, there's an 80% chance that happens. And that's exactly what we're seeing right now here on QQQ, right? The Qs last night broke through all of that resistance. This morning, back below it, coming back up into all of that resistance, struggling to get above it, putting in that lower high, and now cracking the trend line on that lower high. This looks pretty bearish right now at this point in time, right? So the best of the best trade would have been right here prior to the crack of the trend line. And now we're expecting it to roll on over and fade and fall a little bit. Where to? Back down towards around that 467.81 to 468.20. So how could we look to trade this? Well, we can't get in right here because we'd be chasing this move because the best entry was up here. So ideally what we need to see is the Qs open, bounce at the start of the day, put in another lower high formation off some resistance, and then we could look to short that lower high for the next leg down at market open. And that would still be a great trade. The best entries were up here for the crack. Here's your first leg down. We're looking for a bounce. We're looking for a lower high to catch the second leg to the downside since we weren't able to catch the first leg here. Okay, so there's still opportunity and still potential for the Qs to set up for us. Again, key resistance is up here between 473.86 to 474.25. It's up against that 20 EMA on the daily, the 50 SMA, and it's also the bottom end of this gap. So as long as we stay below all of this resistance today, and ideally put in another lower high, there could be a great opportunity to get short on the Qs, expecting to see more downside into that lower zone around 468. But how do you remove your bias, right? Because if I just left it at that, you're probably like, oh man, Josh is super biased to the short side today. I don't like to have bias. I like to remove the bias. Be neutral, 50-50, right down the middle. Because I don't care if the market dumps 5 points or rips 10 points. I just want to be on the right side of the trade. So let's build an opposite plan and have it in place just in case. And what's that plan? Well, it'd be to the long side. What if the Qs just see a lot of buying activity and we have a huge big move up through all of that resistance, and we pull back intraday and hold all of that daily resistance as intraday support? Well, that would be an opportunity to get long. Where to? The top end of that daily gap at 480.11. So that's how you remove your bias, right? Is just look at the opposite side of the market and say, hey, if the Qs did this, would that indicate that there's a long? Yes, it would. Where would we get long to? 480.11. Why? It's a gap fill. So that's going to be the long plan for the Qs today if we don't see the short setting on up. And that right there removes bias. We don't care if the market sets up short. We don't care if the market sets up long. We're just going to wait for one of those two setups to present themselves, and we will capitalize on it, and we will be in the best position to make some phenomenal profits today, guys. Right? So that's my game plan and the analysis here on the Qs as well. Okay? Other than that, I will be watching Tesla. No, I won't. I was like, I'll be watching Tesla today. No, Josh won't. Because right now, we're actually coming back down to this lower zone, and I wanted to see Tesla opening close to this upper zone right here. But we're curling on back down. I just don't really like it. So I'm not going to talk about Tesla too much right now. If we do see it setting up at some point today, I'll definitely discuss it with you guys and talk about it and see if we have opportunity to get in. But right now, I don't think it's worth your time, and I'm going to put it to the bottom of the watch list. But Disney has potential for the gap fill rejection. Yesterday, it was just kind of chopping that level. It got above it, held above it, ran up to that 20 EMA on the daily. But we saw the 20 EMA get hit. We saw the rejection, and we closed back inside of the daily gap. So this potential gap fill rejection is still valid because we didn't close above the top end of the gap yesterday. So what I want to see is Disney open below the top end of the gap at 94.13, push up and tap the top end of this gap at the start of the day, get rejected so we can get short on Disney back down to 91.69. So the gap fill rejection is still on watch. It's still in play simply because we did not close above the top end of the gap yesterday. We got rejected right back below it towards the end of the day. So again, where Disney's opening right now is ideal. So we're opening inside of the gap below the top end. When Disney opens, all I want to see it do is open, push up to 94.13, get rejected, and then look to get short, expecting that we see some downside. And your main profit target would be 91.69 here on Disney today. So let's keep Disney on watch for a possible gap fill rejection today. All right. So Disney's on watch. Tesla's at the bottom of the watch list. Same thing with Meta. Meta's towards the bottom as well. I'm just going to keep Meta on watch up around 526.51 to 530.03. There's a lot of daily resistance up at that zone. So, I mean, if Meta comes up into that zone and we get rejected, I would get short back into like the mid 495s, the mid 490s, right around 495 on Meta. And really, I'm just looking to play it the same way as we were looking to play AMD yesterday. Right? We had a key area of resistance overhead on AMD. AMD opened, pushed up to key resistance, topped out, and we flushed. I'm looking for the same thing to happen with Meta because we're coming up into very, very key resistance. So if Meta opens on up below resistance and we push up into it and we get rejected at that zone that we just discussed, I would be interested in playing the short back down to 500 and then the next daily zone of support we have right around 495 on Meta. Okay? So let's keep Meta on watch. Key resistance is, again, between 526.51 to 530.03. And all we're looking for is for Meta to get there and simply just get rejected and stay below that level. And that's an area that we could look to get short, expecting a little bit of downside. And it was the same plan and the same approach we had with AMD yesterday. Let it come up into that key zone first, wait for it to get rejected, then get short. That's what took place. So we're looking for the same thing to really play on out with Meta, where we come up into that key zone of resistance, we see it get rejected, we look to get short, ideally back down to 495. Okay, so Meta on watch, Disney for the gap fill rejection, definitely on watch for today as well. And then last one I got for you is NVIDIA for a gap fill rejection as well. So go ahead and mark up this gap on NVIDIA, right? We got the bottom end of this gap at 120. We got the top end of this gap at 122.11. If NVIDIA comes up and fills that 122.11 gap, we could see a gap fill rejection and see some downside. I don't love NVIDIA, but it's definitely watch list worthy. Something I want to keep on watch for today to see, does NVIDIA get up to that 122.11? Do we see good price action that indicates we could see that gap fill rejection? If so, there could be some opportunity to play NVIDIA short. But that's towards the back burner of the watch list as well, because we have better opportunity. I mean, the SPY is sitting at some really awesome levels. I want to focus on the SPY. The Qs already setting up to the short side. I'm going to try and catch the second leg down, right? That's my game plan. That's where my head is. I want to put most of my focus on the Qs right at the start of the day. Even Disney and Meta look better than NVIDIA, but NVIDIA is showing potential, so I do want to keep it on watch for today and see, does it set up at some point? So a gap fill rejection at 122.11 is ideally what we're looking for today here with NVIDIA. But top stocks, number one, focusing on the Qs. Number two, the SPY, because we're actually at the top end of the gap. So that's my number two focus for today is going to be the SPY. My number three focus is Disney. Number four is Meta. Number five is NVIDIA. All right, team? So we got about 3 minutes until the market opens. If you guys have any questions, let me know. If not, we are all set, ready to rock and roll here, guys.
I'll be real quick.
What's up, buddy?
On Qs, I think the zone of 473.82 and 473.82 and 474.42.
Okay.
I see the 50 SMA is also right there.
It is.
And I did a fib retracement from July 17th candle high all the way to July 30th candle, and it's inside that golden pocket as well.
Okay.
I
Yeah,
don't
if
know, is
I were
that
to
a
run a
valid-
fib, just so you know, like you can definitely
gonna
run a
say-
fib from this swing high to this one, from this gap down high to this one. You can run fibs off those points, but for
Okay.
this bigger move, right, I would go from all-time high to pull back low, and I would really focus on this bigger fib from swing high to swing low as like your main, more significant fib level.
Okay.
And the reason I say that is because if you go ahead and run this fib up, you know it's going to be the most significant because it's being ran off the two most significant points. So then if you start putting other fibs here, for example, off these points, and you see those fibs lining up with the main one, it just gives you more confluences.
Okay, got it.
So start with the biggest, most clear one, right? This is going to take priority. And then, yeah, you can definitely mark those other ones up. So what I see is you were seeing a golden pocket off your fib, which is in line with my 50% fib off this bigger swing high to swing low, which gives you one more confluence based on that extension. But yeah, man, I mean, to say the least, I mean, there's a lot of resistance. You got your 20 EMA overhead. You got your 50 SMA overhead, right? You got the top, or I'm sorry, you got the bottom end of this gap, right? Up against all of this prior support that turned resistance, and we can see it turn resistance again, and you got a boatload of resistance overhead. So, I mean, it's looking really, really strong for a possible short today below that 474.25 region.
Okay, thank you.
Now, did you have a specific question about your zone? Because I know you started with your zone, and then you went right into, like, fibs. I didn't know if you had a specific question about the zone that you had.
No, just that zone that I saw. It was also heavily expected, the one that you also had marked down.
It is,
But-
yeah. It's definitely looking good. I mean, if we see the Qs holding below 474.25 today, there's definitely good potential to see a nice short. But again, the way I look at the Qs is this was the short opportunity right here. That was your lower high into resistance. There was your weakening. There was your crack. There was the short. Do I think it's going to get back up to that level of resistance? I don't think it will. And honestly, if it does, I don't know if I'm going to like it short. I want to see a lower high formation. So the goal here is, here's your first leg down. Where's the lower high going to form? Where can we look to get short to catch the second leg to the downside? Because this here, the crack of the trend line is your first leg down. We want to see a bounce. We want to see a lower high. And we want to try and capitalize on the second leg down if we get it. So I really don't want to see it back up at 474.25, ideally. Because the way I look at it is if we get back up to that level, it'll probably try and break through it, maybe move to the upside. I'd want to see a nice lower high. And so one thing you can do as a reference is just run a trend line off of these lower highs. And let's see if we get a lower high, maybe near that downtrend, and that would be a pretty nice area that we could see some sellers start to step on in. That's just one thing we
And-
can do. Just one thing.
And at this moment, you're counting pre-market and post-market data, correct?
I'm just referencing this trend line, not saying, hey, if it comes up
Okay.
to 0.3 of the trend line, I'm getting short. I'm just referencing this downtrend to see if we even have any price action off of it that would validate a possible trade. But I'm not planning on getting short off the trend line. I just want to see if we even have any kind of price development or price action at it. Still going to need more reasons and more confluences to take the trade. But I'm just using the trend line as a reference because we clearly have two distinctive lower highs. And I'm just using this downtrend as a reference point of where could resistance be along this potential little downtrend here. But now I want to deploy the fibs, the fib extensions, look at other forms of TA. Do we have any 5-minute fair value gaps overhead? Like, what else do we have? That's the goal. And do we have confluences that line up near that downtrend that would probably validate, utilizing the trend line as well? But I want to see it bounce on back up. We'll go get some hedgies too. Let's go ahead and grab those hedgy pressures. Maybe we get some confluence there on the Qs.
Could you grab Disney hedge pressures as well?
Absolutely. You got weekly and monthly stacked at the same price on the Qs, and that's at 472.50. You got 472.50 monthly and weekly hedge pressure today. We go get the SPY real quick, and then we'll go grab IWM and Disney. All right, so what are we working with here on this SPY? We got a 552 weekly. We got a 552 weekly hedge. And you got a 540 monthly, so it's way down there. We got a 540 monthly. Disney. Let's see what we got with Disney here. $94 is your weekly hedge. So $94 weekly hedge on Disney with a $93.50 monthly. Pretty tight.
Like
Yeah,
that weekly.
$93.50 monthly.
I like that trade today. I've been looking at some contracts, so I've done some of the TA on that. So if you're looking at some point to get into Disney, I can talk about that.
Yeah, I like it. I mean, we got hedge pressure at 94, top into the gap at 94.13. I like it. And then you really need to see the thing flush below 93.50 in order to really get some downside. Because the last thing I'd want to see it do is obviously come up, top into the gap, reject off hedge pressure, and then just kind of sit here between the two hedges today. You'd only be able to catch 50 cents out of it if it stopped falling at monthly hedge. But you get below monthly hedge, oh, you're looking really good to the downside here.
You get hedges for NVIDIA?
Absolutely.
Thank you.
Let's see what we got here. NVDA. She's still loading. All right, we got a 119 monthly hedge pressure. 119 monthly here on NVIDIA. All right, and then we have a 118.50 weekly. So we got weekly and monthly stacked right overhead. So you got a 118.50 weekly, and you got a 119 monthly. Is that yes? Yeah, that's the money making music in the background. Abso-freaking-lutely. We call money making music.